Welcome. In this video, we are going to go over the Tradingwolf Premium script, which is our main pattern identifier. To learn more about how you can use these indicators, you can find out more information on our Discord group and documentation on our website. For this video, we will break down each part and explain its features. Down below, you'll be able to use the chapters if you're wanting to find out some more information on a particular part. Breakout zones highlight areas of strong support and resistance. They tend to take pivot points where the price is bounced away and then come to retest. So if we have a look at a couple examples here, just this resistance line here, we can see this is where it initially started, comes up, tests it, fails, tests it again, drops back down, and we get another test. You can see there's many failures off here. We eventually get the break up here with a nice move. Slightly smaller one here, comes up and tests, comes up and tests. It's not going to necessarily need to touch it exactly. If you do that, then you're not going to get many zones at all. So we use a few little, you can imagine it's like a little box here is predicting where price is going to come up and retest. If we just look at a bearish example here, so this green line where price originally starts here, comes up away, comes back down, tests it, so this defines it, comes back up, and it does actually break it to the downside, but we quickly have it reverse. So this would have been a bad trade example. But just to show you, you want to use it with every means of confluence. This is clearly a very strong uptrending market, so you don't need to be looking for breaks up here, such as these two here. Just to go over the settings though, so once again you can either click in the settings cog up here, or you can just double click anywhere on the actual indicator. So first we have this toggle here where you can turn them on and off. Next to it you'll have a sensitivity setting which ranges from 1 to 10. 1 will give you the fewest signals because it's calculating on a shorter range, and it gives it less time to be able to calculate a bounce away and touches. You're just going to end up with slightly less, even though, yeah, you can see a few of them just disappeared there. Whereas if we put this up onto 10, then we should have everything we have here plus more. So this depends. I mean, it depends what type of trading you want to do, but we personally like leaving it on 10 and just seeing all of them. If you think it's a bit too much, you can turn that down. You have an option to disable the labels if you just find them a bit noisy. You can change the colors of the labels as well. If you just want to make them faded, you simply just change the opacity down. We've got the support and resistance lines themselves. You can change the colors of, the width of them, and also the line style. DSH, this stands for dashed, dotted, and solid. So if I want them to be a solid line, they're all going to be quite thick now because I've just put the width onto 4. But just to show you, there you go. Now, some people might think that's a bit cleaner, probably not on that width, but if I turn it down to 1, this is loading a little bit slower as well because I am screen recording. It does normally run a little bit quicker than it is. But yep, so this is just to show you what you can make it look like. You can customize it in all sorts of ways, and this you'll see that we've tried to do that, give you guys as many options as possible so it'll look exactly how you want it to. Now, to set an alert, it's really simple. We'll do an actual video covering alerts and the most efficient way to set them all up. But just for this example, I'm going to show you how to set up an alert on each part. So starting with the breakout zones, we're just going to simply toggle this on. Now, you have options in here for once per bar close, or all. Now, depending on the type of trading you want to do, if I just zoom in here, once per bar will trigger the alert soon as price hits the actual line. If you want to wait for the confirmation, you'll want to use once per bar close, which is obviously going to wait until this candle closes to confirm that it's not just a wick over. If this closes above, that's when you receive the alert. For this example, I am actually just going to leave it on once per bar close. Click OK. There's a couple different ways you can go from here, but we're just going to go over to the indicator, onto the 3 dots, add alert. Now these top boxes should be default selected onto the correct ones for you. If not, just make sure it's on Tradingwolf, and any alert function call, it's not actually going to let you change that. These other options are completely up to you, and you may be limited depending on your TradingView subscription. But for now, I'm just leaving mine on open-ended, and I just want to have a pop-up. You can have it so it sends you text, emails, anything you want. But for now, I've already got some cool Tradingwolf breakout zones. Name it what you want. Actually, I'm also just going to include 5-minute Bitcoin. You're going to receive a repainting warning here, but I'm going to cover over why that happens. It's to do with one of our dynamic support and resistance. It's not to do with this breakout zones at all there, so you can just click continue anyway. Then that is the alert created for you. Next, we have the dynamic ATR support and resistance lines. These are the only part of all of our indicators, at the time of this video anyway, which do actually repaint. If you're unfamiliar with what repainting is, it means that these lines will move as the day goes on. We do this because we are taking levels from the daily time frame, the current day that is, and we're calculating the ATR value of that current day. This will obviously change as the day goes on, but I mean, I'm currently just on the 5-minute chart here because you want to use this for scalping. We don't recommend going over the hourly time frame. It simply won't work on the daily or higher time frame. But yeah, just for example, 5-minute time frame here, we're in a very volatile time at the moment because FTX has just filed for bankruptcy. So markets are very unstable in the crypto industry anyway. But just to show you how well these levels do work in live action. So we're taking this 0 daily close line here, which if I go across to, you can see daily close at midnight here. So this will be exactly in the middle of these two 0.5 ATR lines. From there, we are calculating, obviously the 0.5 is 0.5 ATR distance above 1, 1.5 ATR distance above up to 2, and vice versa below. These levels will change. That's why we actually don't offer alerts on them. They're one of the only parts we don't offer alerts on. But it's, yeah, they're mainly made for scalping, take profit levels and entries. Now, if you want to find out more ways we actually use this, you can refer to it in our documentation or our popular strategy section, or in our Discord group. We'll often share trade ideas with these in mind. Just to explain the settings, obviously this toggle is going to turn them off and on. This line color will affect the lines. Label color will affect the labels. You can change the width of the lines if you want to make them more obvious. And if you're interested to know the actual price points of these ATR levels, you can simply change the text size. So if I go on to normal here, there we go. So you can see here, now that's a bit more prominent, obvious. If you're just interested to see what these are price level wise, then you can do that. Next, we're going to look at the bull and bear flags. These flags are signs of continuation patterns, so you'd be looking for them in trending markets. For example here, we have an uptrending market structure where we're putting in higher highs and higher lows. Therefore, when this flag is formed, we know that we want to trade this to the upside. To enter a trade, you'd be waiting for a break of this top upper line. So if we just extend the line out, you'll see we have that on this candle here. This is where you tend to enter in your long position, and common practice is to have your stop loss below the swing low here. Sometimes you'd want to use an ATR distance away in case it comes back. Here we have an example of a bearish flag where we have a downtrending market structure with lower lows and lower highs. Once a bear flag is formed, you look for a break and close below this line here, which happens on this candle. Stop traditionally above the swing high or an ATR distance above and play it down. If the price ended up closing above this top line here, this would invalidate the pattern and you'd look for the next one to form. Now to explain the settings, I'm just going to double click onto this. So once again, like all of these, you have an option to enable and disable it. Same for the labels. And then you'll also see that we have this HF option, which are on a few of the chart patterns. This stands for high frequency and means that it will be searching across different time frames and pivots to try to find more of these patterns for you. The correlation setting, this is measuring the slope between the top and the bottom line. So for it to be 70%, that means that these slopes must be within 70% of each other. If I put it onto 100%, that means that they need to be exactly the same. This is never going to happen, and it's very unlikely that you'll ever find a flag with these options, but we just like to include the options so you can customize them how you want. Vice versa, if I go onto the opposite end and put in 1, you'll notice that lots of flags are going to form which don't necessarily look like flags, where these ones, there we go, here's a pretty awful looking one, but we're trying to give the user as many options as possible so they can customize how strict they want to be for these chart patterns. You'll see this on a few of them. We do plan on adding more settings for the flags, but for now the correlation is the main one. We tend to like to leave it on 75 to 80 area, so if I put it back onto 80 here, the chart's much cleaner and that's a much better looking flag than the others. Customize wiser, you do also have the option to change the colors of the solid outside lines and the flag fill as well. Inside, if you toggle this on, you will be able to see the inside parts of the flag which draw it. You can change the colors of those, the width of those, the styles of them both as well, so if you want them to be dotted or dashed. But we personally like how it will be in the default. We think this looks the cleanest rather than having all the different options. But once again, just trying to let the user customize as much as they want. Now for the alerts, they're really simple. We like to leave it on once per bar closed. You can use once per bar, and it does mean that you may get them a tiny bit earlier, but it does also mean that you're likely to get the signal sent a couple times, as like you'll have it sent before the candles close, and then you're likely to get another signal sent once it's confirmed, because that's how the trading view alerts work. So we recommend going with once per bar close. Make sure the alert is toggled on, and none of the other ones are on. I'm going to go to here, add alert, and simply just call it what you want. Click continue anyway, and then that'll be all alerts for on this particular time frame, the Bitcoin 15 minutes I've just set it for bullish and bearish flags. Next, we have rising and falling wedges. Falling wedges are bullish patterns, whereas rising wedges are bearish ones. In this example here, we can see a downtrending market with a rising wedge. Now they can also be traded as in reversal signals, however continuation tends to be more profitable. So for this example here, similar to the bullish and bearish flags where we are waiting for a close down below this line here. So we would enter a short position on this close here. Now commonly you would put your stop loss either on the swing high or an ATR distance above. So if you only used the swing high in this example, you would have actually got stopped out, whereas if you put an ATR above like we recommend, then you would have been fine. So this would have played out nicely down to the short side. If price, however, did close above this top line, that would invalidate the pattern and you'd wait for the next one to appear. Opposite to the rising wedges, we have the falling wedge, which is a bullish pattern. Here we can see a reversal example where we get the pattern formed. We wait for the break to the upside instead this time. So if we just extend this line slightly out, it doesn't quite close on this candle. So you would end up entering the trade here with a stop loss, swing low, or ATR distance below there. And you would then trade it to the upside. Just to explain the settings on these as well. We have the option to enable, disable them. Same for the alerts. And we have the high frequency option. The angle percentage is checking the slope between the top and the bottom line. For a falling wedge, the top line must be at least this percentage angle steeper than the lower line, whereas it's the opposite for a rising wedge, where the bottom line has to be an angle percentage steeper than the top to validate the pattern. The height setting here is measuring the distance between the start and the end point here. So this example here, or with 10%, we're saying that this endpoint has to be at least 10% smaller than the start point. If I push this up to, I'm going to say, or if I just go 50%, that's going to make sure that this pattern doesn't count as a pattern. This is just another feature because we want the user to be able to edit these patterns as much as they want. They can decide what defines a falling and rising wedge for themselves. But I'm going to push it back up. I think 20 should be okay without measuring it. Yeah, okay, cool. So I'm going to leave it on 20, for example. Then on the style side of things, we can edit the colors for the falling and rising wedges. We can change the line style of the outside of the pattern as well as the width. If you want to display the inside, you can toggle this on and you can also edit those lines. Once again, we personally prefer to have these disabled because we think it looks much cleaner. Setting alert, very simple. Simply toggle this on. Once per bar close is what we recommend. Okay, 3 dots, add alert, and then name it what you want. I've already created these before, so it doesn't come up as an option though. Falling and rising wedges, I'm on the BTC 5 minutes. Continue anyway, and that's both falling and rising wedges, both in one alert. Next, we have the head and shoulders pattern as well as the inverse head and shoulders pattern. These are both reversal signals, so you trade the inverse pattern to the upside, whereas you trade the traditional one to the downside. This here is an inverse one, which is clearly defined with a left shoulder, head, and right shoulder. Once price breaks this upper point, we get a neckline formed, and trying to be completely transparent and not mislead people into thinking that this shows up down here, we've decided to include a C signal when the actual pattern is confirmed. This tends to be confirmed pretty much as the neckline breaks, but unfortunately for this example, they're not all perfect. We're just very proud with these anyway, because if you look at the traditional trading view built-in ones, they take about 15 to 20 candles to actually confirm when the breakout happens, so they're far too late to trade. But anyway, for actually trading these patterns, you'd either look for a retest of the neckline. We don't recommend trading them on the neckline once it's at an angle like this. If it's flat, then we'd recommend it. However, if it's at an angle, you'd normally look for the last opposite cluster. So for an inverse head and shoulders, you look for the last red candle around the right shoulder. So I'm just going to get a box here and draw from the top wick to the bottom. And I'm hoping that this is going to, yeah. If I drag this along, you'd have seen this would have been a pretty perfect entry, as we then trade to the upside. Here is an example of a head and shoulders which you'd be looking to trade to the short side. Once again, we have the left shoulder, head, right, confirmed here, sort of on the retest. But as I said earlier, you'd either look to trade it onto the neckline or into this last green candle here. So this would be where you're looking to trade, which if you only just saw this come through, you may not enter straight away, but if you waited, you would have entered here. Traditionally, you do put the stop loss above the right shoulder or below if it's an inverse, but once again, you may want to test it out with the ATR distance as well, just because it depends on the market you're trading. But this would have been another example which traded nicely down. You may also notice a P signal appear on your chart. This is a possible head and shoulders sign. This appears before the confirmation, and if it gets confirmed, the P signal will disappear, but we like to try to give the traders a bit more warning before the pattern actually plays out. This example didn't actually end up playing out as a head and shoulders, so if I do this, this is sort of what it was looking like, but the neckline never actually broke, therefore it didn't confirm the pattern. If it held on, it would have broken down here, but then this is no longer a technical head and shoulders pattern, so it doesn't play out. Just to explain the settings of the head and shoulders, we do plan on adding more features so you can customize how strict they are, but at the moment it's pretty basic. So you have the head and shoulders patterns, the labels, and you also have the high frequency option. Change the colors of both the patterns, pattern style for the inside and the neckline. For setting alert, simply toggle it on once per bar close, and then we're going to go up to these three dots, add alert, create, continue anyway, and it's as simple as that. That'll do both inverse and the traditional head and shoulders. Next, we have the symmetrical triangles. These triangles show areas where price is consolidating and getting into a tighter range. After we get into that tighter range, we tend to have a breakout and expansion. For this example here, we have the range formed from this price getting higher and lower, but getting into a tighter range. Price ends up breaking out. It's not the cleanest breakout as it ends up closing back inside, but if you're on a different time frame, it would look different. But this is clean retest and failure before heading back down. To trade this, you would either enter on the close of the candle which breaks out, but this one's pretty far away, so if you saw a large candle like this, you'd look for a retest back up into this sort of consolidation area, or you can also use the candle. So if this breaks to the downside like it has done here, you would use the last candle of the opposite color, so this green candle, if you want to be overly cautious, and use that as an entry. For this example, that would have worked perfectly, but it does also mean that you'd miss some examples. Stop loss, we'd recommend using one ATR above the swing high for this example and below the swing low for a bullish example. Here we have a bullish example where we end up actually getting a breakout on this small green candle here. This is where you look to take your long position with stop loss below the swing low, recommending using an ATR distance away. Expansion, or first it comes actually back into the triangle before then expanding out and then breaking out. Now if you ended up missing this, same sort of rule applies as the bearish side, where you look for a retest into the first candle of the opposite direction, which is this one here, and that gives you a pretty perfect entry into this next bounce. However, I don't think the trend actually continues. If I scroll along, bounces up a bit. I mean, depending what time frame you're trading and what asset you're trading, this will vary, but these levels tend to be respected pretty well, but eventually it doesn't look like we have much more of an expansion. We're putting in lower highs here comparative to the first one, so you wouldn't want to stay in this for too long, and it does end up breaking to the downside. Now, just to explain the settings here, I'm just going to double click on this and scroll down to triangle. Now we have the traditional turn it off and on labels, higher frequency options we have for most of the patterns. Then we have this angle pattern. Now to explain this, I'm actually going to use the Fibonacci tool, Fib retracement, and I'm going to mark up the high and the low. So what this is doing, and I'll just show you the levels this is marked out, this is marking out the 0.25 and the 0.75 line. So from here, once we've had these 2 points, we are looking for a retrace above the 0.25 line is what we have in our settings here. Just to show you. So this 0.25 line means that price has to retrace at least back up into this area. Then once we have this confirmed pivot, we're now looking for it to retrace back down into at least this area. If I move the pivot Fibonacci lines, so it's got to retrace into at least this area. So this is how we are configuring finding the triangle. So if you want to try find one which has a longer consolidation period and goes further sideways, you would decrease this value and put it down to like 0.1. Whereas if you're not so fussy with your triangles and you don't mind them not being exactly perfect, you could put this onto 0.5. And if we just have a look what sort of triangles appear with these. There we go. So we have a few more triangles come up. I mean, these still don't look too bad, but they're not as clean and symmetrical, I'd say, as the first one. But yeah, play about with the settings, see what you like. Obviously, the higher you go, the more triangles which will appear on your chart. We have top line and the bottom line resistance support colors here, the fill color of the actual triangle, and then you can change the actual lines whether they're solid or dashed. Alerts work just the same as all the other patterns, so simply toggle this on. Recommend using once per bar closed. Okay. These 3 dots, add alert, top boxes all on the right ones. If I can spell. Continue anyway, and there you go. That will appear all triangles for these particular settings that you created the alert with here. Next, we have the double tops and double bottoms pattern. These are reversal patterns, and you would look to trade them when we have a break of the neckline. So for example, here we have a double bottom. This gets formed and confirmed on the break of this neckline here. You'd either commonly look to trade it on the actual close, or you look for a retest on the neckline to long it up. Vice versa for double tops. It'd get confirmed on this candle here, and you look to trade on a retest of the neckline or on the actual close itself. You'll see quite a lot of these form, and you do have some settings which I'll go over in just a second for actually trading them. So we have 2 right next to each other here. Once longing, these can be a bit riskier, but considering they're reversal patterns, you're looking to play swing moves, so large trades. You put your stop loss below the swing low here, or an ATR distance below is what we recommend. So for this example, you would actually take the lowest of the 2 points. So sometimes it's going to be the first point, sometimes it's going to be the second point. So you put your stop loss below this point here. If I just try to find another example, so this is another example here where double bottom actually does, so it gets confirmed when this wick goes above. So on lower time frames, this would have been a fake out, come back in, so this would have liquidated a lot of traders both sides, and then it does actually get an ever close on the outside here. So once again, you can either wait for the close or trade it on the initial break, but with your stop loss below, you still would have been fine either way. Now, I wanted to show this example just because it looks kind of messy, but just to explain, it's registering there's a double bottom being formed here first, and that's confirmed because there's a wick here which goes up and it's above the neckline, but it doesn't actually close, so you wouldn't have entered here. Then we also have 2 double tops formed right next to each other, which actually forms a triple top. So even if you traded both of these with your stop loss, it would have had to go above this stop here. You'd have been fine, and then this would have ended up being a nice move to the downside. Just to go over the settings for these. You can choose whether you actually have any labels at all. So if I go to none, this is going to remove all the labels, or you can just have it display on one of the points. The sensitivity setting depends, lets you choose how far away these actual tops and bottoms are allowed to be. We like to be quite far away because this often shows divergence plays as well if you're using the oscillator script. But if you want to be really strict and say that they have to be much closer to each other, you want to make this value lower. but we personally like leaving it on 5 and spotting as many as possible, then we can decide whether to trade them or not. You can obviously change the colors of both of them and set alert, simply toggle the alert on here, and then choice is yours for once per bar. That would mean that you get alerts for these sort of wicks here, but if you're an active trader and constantly watching the charts, then I'd probably recommend that so you can decide how you trade it. Or if you're not got so much time, I'd recommend using once per bar close. So I'm just going to do that. Add alert. Once again, all these options are set for me. Double tops and bottoms. Create, confirm, and that's going to signal all alerts for me. Next, we have the Fractal Predictive Price tool. Now this one is very experimental and we don't recommend using it to trade, but it's just to give you an idea of what could potentially play out by using previous fractals. So for example, for here, you'll notice that these tend to line up with lots of support and resistance levels. Being in a very volatile market that we are right now, it's a little bit trickier, but you'd obviously, this would be a clean support and resistance level where it does actually interact with quite a bit. Rejected, rejected, sort of flipped, does actually close below it, but then ends up breaking to the upside. Very experimental, but if we go into the settings, I'm just going to show you the different options you have. So you can change what it's calculated on. We quite actually like using the open, high, low, close 4. So this takes into account all the wicks. You can choose a term it's calculated over. So this is going to change how many candles it's looking back and then predicting forward. So if we go on to short, it's going to be looking at the shortest range, which has been a fairly volatile one. Yeah, so it thinks another spike down and then push up. Medium, slightly further ahead. And then obviously long, which is what we started on. You can have some funny ideas with this. If you go into the daily time frame, I expect we'll probably get some funny examples. Actually, that looks kind of bullish, really, considering how the market has been going. Obviously, it doesn't take into account news or anything like this, but this is just fractals. Once again, we line up this key level here, which has been around for a long time. It still respects that pretty nicely, but I mean, I think this might be slightly optimistic, judging the crypto markets. But anyway, just an interesting tool. We don't have any alerts or anything you can set with this because there is nothing to alert on this. So as well as changing what it's calculated on, you can change its display color, line width, and line style. But yeah, just a little neat tool we decided to add. Next, we have the trend lines tool. This is actually struggling to draw anything on this because it always looks at the latest price action, but looking at Bitcoin, there is no real trend line to draw here. So if we maybe just hop over to the SPX. So here it's drawn a nice resistance line for us, just to show you that it's not my line. The drawings are taken off here. Clean resistance line drawn, it would have been drawn from this point here, so that would have been a nice resistance point, and it looks like it's going to come up to test it again. See if I can find one where there's a support line. Just changing time frames on the SPX. No. There we go, there's a support line which is drawn in for us. Well respected, and you would look to trade this if it comes back down and you look to long here. Simple. Just to show you the settings on this. You have an option to change the sensitivity of these, so I should have probably made them slightly lower, but it may end up removing this line. Yeah, so this is going to make it look over a shorter period of time, so there is still one here, and if I go slightly higher, I expect it may not be there, or it may latch onto this point still. Depends, it's going to be looking over a larger period, and looking over this larger period, we are actually downtrending, so it's harder to draw support lines, but it's still locking onto this one here. We personally like using 3. Pivot count is going to be checking how many pivot highs and lows we're going to be looking back over as well. If you're unsure what that means, just leave it on 4. It's a pretty average setting. You can change the colors for support and resistance lines, line style, and the line width. Next, we have the channels tools. Now there are actually 2 different types of channels here. We have linear channels and traditional channels. So looking at the traditional ones first, they're pretty simple, support and resistance lines from above and below, looking for parallel lines. This example, I'm actually just going to go straight into the settings here just because there's more to talk about. The idea of them is pretty simple, where you look to long on the bottom of the channel and short on the top of the channel. But if I go into here, you can change the sensitivity of them and the correlation as well. So if you don't think like you're getting many channels showing up, if you decrease this, so if I put this down to 50, we're going to have more channels which are allowed to come through the filter, because it's checking the slope distance, the slope angle, sorry, between the top and the bottom line. If I put it onto 100%, it only let ones which had exactly the same parallel lines, which is very unlikely. So we like to use 90, but if I just zoom out, we should hopefully see some more. I'm trying to find, okay, this one here, you can see that the angles aren't actually perfectly symmetrical here. Same for this one, they're not too bad. Maybe I just want to get some more extreme ones, so I'm just gonna drop it down to 10. That's slightly worse. Okay, well, it's not showing me any bad examples at the moment, so I was hoping I could show you some which are a bit more extreme. But anyway, for now, you can play about with that. I'm going to just put this back up to 50 for now. You can also choose whether these are calculated on the close of the price or the wicks, because there's two different types of ways of drawing channels. One using the close price, ignoring the wicks, and other people like to include the wicks. I've heard from two different types of professional traders completely opposite things, so this is going to be down to personal preference and what you like to do, what works for your trading. But just to show you, I'm going to choose wicks here and see if it finds another channel. It actually, yeah, it's still drawing a channel here, but using the wicks because that lines up. Any others? There we go. Yeah, so there's some more channels, but all of these are going to be using the wicks. That's a pretty extreme one there. Okay, I'm back into the settings. We also have an option to choose how many candles you allowed outside of the channel, but still to think it's a valid channel. So I didn't see any examples here, but basically what this is doing is once it finds a channel, quite often you can have a fake out, where price breaks out of the channel, people long it, and then it comes back inside the channel, and then it liquidates all those traders. So you've got a setting which lets you allow candles to break outside, but then come back in and still be a valid channel. Then it's more about the style, where you can change whether they're dashed, dotted, or solid, and then you can change the colors of the resistance and support lines. To set an alert, it's just like everything else, so simply toggle this on here. We recommend using the once per bar close, which is going to trigger once we have a confirmed channel. Okay, these three dots, add alert, channel, BTC, USDT, 1 hour, continue anyway, and it's as simple as that. Finally, we have the linear channels. These, depending on what you have the settings on, will take price data from X amount of candles back, and they'll find a median point throughout this price. From there, it'll create these standard deviation lines, 1, 2, and 3 above, where price will often retrace and react with. We've decided not to set any alerts up with this because this is dynamic, a bit like the ATR support and resistance, where it will move as the day goes on and it will react, because obviously if 10 new candles are formed, we're now looking at 10 less candles back here, so we create a new median. There's a few different ways you trade with this, but in downtrending markets, you tend to look for shorting these upper standard deviations, and your take profit levels would be from the median point downwards. Vice versa, for an uptrending channel, you look to long the bottom standard deviations and then take profits higher up. Sideways channels, depends on your trading strategy. You definitely want to have ever confluence with it, but if you have a sideways channel, similar idea, where you'd be looking to long the bottom ones, and then your take profit would be the median point, because if you're not necessarily uptrending, you can expect price to actually touch these upper lines. But it's pretty simple concept. I'm just going to go into the settings for them. So you have the sensitivity here, which will change, like I said, the candles which you're looking back. So if I drop it down to 2, for example, we're now looking at a lot less candles. So now we're actually looking like it's an uptrending from these median point, this median point line here. So you'd be looking to long these lines here, short these lines here. For the style side of things, you can extend them further left if you're interested. We tend to think it looks a little bit messy, so we have this off, and if you don't want to extend it to the right, you can have it just go to the current bar. You can change the style of the lines if you want them to be solid instead of dashed, and then you can also change the colors. So say you want the bottom to be bullish and the top to be bearish. I've done it the wrong way around, sorry. So this first one is for bearish box. Second one is for the bullish box. You'll see now it looks like you buy here, sell here. Pretty simple concept, but once again, you want to use this with other means of confluence. Don't use it to trade by yourself. Well, that is everything in the patterns video. I hope I explained it well enough that you understand. There obviously will be updates in the future, but that will go onto our documentation and information will be in our Discord group as well. If anything still doesn't make sense, then feel free to ask us in our Discord group. But otherwise, we look forward to seeing you part of the Trading Wolf subscription. Thanks for watching.
Bust this.